All right, so let's welcome Ashish Gupta on yet another podcast, the Tech Factor podcast by Purple Quarter. Ashish, thank you so much for taking the time and being with us here virtually.
Thank you so much, Roopa, for having here. Really excited to be here. Hi, everyone.
Awesome. So, Ashish, I think for most people who don't know you, of course, we'll have the handles which talk about where you are at, but I'd like to, formally introduce you to the audience who are watching this podcast. Ashish Gupta is from IIT Delhi and has donned multiple hats, right? You've actually been co-founder twice, you've done marketing, you've done product, you've been a CEO, you've been part of the technology side, the CTO roles as well. I find this entire thing extremely intriguing. So my first question to you, Ashish, is, you played multiple of these roles. I'm sure the essence you bring to the table will be far more than one imagines for just a CTO role. So could you tell us how have some of these roles helped you in your current role at Progcap for both product and tech?
Oh, yeah, absolutely. So yeah, as you've said, I've had an interesting career. I am a chemical engineer by qualification. I joined a FMCG, in fact, a paints company as a product manager. And by product manager, I don't mean any of these sexy uh, air-conditioned office-based things. I mean sitting on a garage and getting paint on a car. That kind of product management is what I started my career with. I did 2 years of that. I did 2 years of sales. I did 2 years of Six Sigma, Black Belt, whatever you want to call it. I joined a startup at a time when I had to Google the word startup. That was way back in 2007.
Okay.
That company finally got acquired and is known as Kelton now. It's publicly listed. So that was 6-7 years I was with them. Did a small stint with Healthcart in the middle, a longer stint with Policy Bazaar. These were all more tech product, and Policy Bazaar was also interesting. I joined as a CPO, moved to a CPO plus CTO, moved to a CPO plus CTO plus digital marketing head. Yeah, so I think in all senses I've been all over the place. It's been fun for sure. But to come back to your question, I think it is a case of jack of many trades, maybe master of none. But it does help because when I speak to sales folks, I can identify with them. It's very interesting now. I'm working with Progcap, which is a SME uh, supply chain retail financing company, essentially working with distributors and retailers. And that is what I did 2 years in the beginning of my career, as I mentioned in sales. So it's very interesting to go back to those days. When a sales guy says something, they tend to, as they call it, mansplain and, explain to you, assuming you're a geek who doesn't understand anything. And they're quite taken aback by the fact that you've done sales for 2 years. It helps because you know their pains, you know the opportunities. I may not be updated because I did sales about 17 years back. But the essence remains the same. So when they say something, it's easy to identify and relate to what they're saying. Similarly, when you talk to other functions like in operations, I've overseen a lot of operations with, let's say, the CEO role at Doc Prime, even at Policy Bazaar, even though I wasn't officially responsible for it. So you get this sense of how do you take on operations, how do you automate, what do you eliminate, what are the pitfalls, how do you take care of customer satisfaction. And every industry is nuanced, so there is a learning curve with every industry. Lending is new to me. I've been here for 1 year. But I think the essence of how do you listen to a customer, how do you structure an NPS, how do you do an episodic NPS, a lot of that is just copy paste from previous experiences. So some of the things are much faster, and then of course some of the things you have to unlearn because every organization is new. So in that sense, I think you build a rapport with people very quickly because you're not asking fundamental questions. You understand their pain points. You're more asking them their perspectives on how to solve those pain points. So it's just a faster curve. You get a little bit more respect, and that works out well in the long term.
That's very interesting. So, on that very subject, I'd like to ask you, so does that change the way you go ahead and build technology? Because since you're so aligned to how a business really functions, you played a role of a CEO. So finally, the end objective becomes, is the business making any sense?
I was just saying, absolutely. See what happens, and typically, I think a lot of folks in the audience would have experienced this. There's always this timeline pressure. There's always this, need to get things done in a hurry pressure that often comes up. And very often when you go to a business and ask them for their requirements, their horizons are 1 month, 2 month, sometimes weeks, right? And in tech and product, that's a bad cycle to be in. You can't build something that is going to be modified every 2 months. It's just not productive. So one of the places where this experience comes in very handy is when you take the inputs from the business saying, this is the problem statement or this is the opportunity. And you then go in and anticipate what the person is going to ask in the next 3 years and try and build it in the first go itself, so that, it's like Hero Honda ad, right? Fill it, shut it, forget it. So that's how you try and anticipate. I'll give you a small example of that. Is typically businesses will come up and say that, look, here's the algorithm. When this happens, this should happen. When this happens, this should happen. When this happens, this should happen. This is how they will always structure their requirements. And I think a lot of people in the audience would have seen that by the time you build that, they will tell you in the UAT cycle that, hey, there's a bug. And then there'll be an argument that says that, like, aapne ye to manga hi nahi tha, like you had asked for something else, right? It's a very, very common scenario because the business requirements, as I said, tend to be time cast. The level of attention they have for details. Again, every organization is different, but typically there are a lot of gaps. Now, with your experience, that, look, either you can complain and crib about the change, or you can acknowledge that change in requirements and algorithms is part of business. So instead of building the rules, you actually build a rule engine. So for example, one of the things we've done here is we have a lot of underwriting rules. We have a lot of rules that define. Instead of building the rules, we actually took 1 month more and built out the rule engine. What that meant was that the business could come in and just modify the rules on their own, either with our help or on their own. But if they changed a rule, it was a 2-minute, 5-minute, 10-minute affair, rather than another dev cycle of a 2-3 week, right? So I think the idea is, how do you take a business requirement, anticipate that requirement for 3 years maybe, and ensure what you're building lasts 3 years, so that you can now, after 3 months, build something new and build many, many new products instead of just iterating on the previous product.
This is super interesting. But Ashish, going with where you're at, Progcap is highly regulated because it's a FinTech domain, right? So building these rules, you've already got that framework from multiple of these bodies as well, that you can do this, you can't do this, right? Does it play to your advantage, or do you also see customization on the fly? I know you manage both product and tech, but needed to get that sense from you that you still have a lot of customizations which are not part of the framework that you've already thought of for the next 3 years.
Obviously, right. So I'll tell you what happens. The problem is not the regulations themselves, but any draft is subject to interpretations. So our challenge is not just the regulations. The challenge is the regulations come in. We have 10 lending partners. In fact, not 10, we have now 14 lending partners. How do each of them interpret things differently?
Sure.
Right. Each of them have different appetites and experiences. Right. Some work with a lot of partners, so they know how partnerships work. For some, we are the only partner that they work with. Right. So the interpretations of the regulations tend to be very, very diverse. Hence, needing to build a flexible product becomes very, very important. So, right, the latest regulations are around payment flows. Now in payment flows, again, the same thing is happening. We are having to use multiple payment aggregators. We are having to do a lot of subjective things. So the idea, again, goes back to what I said previously. Instead of building, I think as Google famously said, don't build products, build platforms. So we actually tend to focus on what are the possible combinations. A lender may say this, a lender may say this, a lender may say this. There are 8-10 possible combinations here. Let's just build out all of them and just flag this lender belongs to this set and this lender belongs to this set. So the nervous energy, then what that does is when we are having these discussions with our lending partners, it's not a forced conversation where we are telling the lender that, hey, do this because, if you don't agree, then the work will increase or the timelines will not be met because regulatory timelines have to be met. Rather, we are giving them a bouquet saying that, look, here are the set of options you have. If you have another option, let us know. But it's very unlikely they would have another option. So then we choose one of that.
So how does the integration work since you're working with so many different lending partners, right? And I'm sure the system is talking to their system when it comes digitally, or there's a flow of information. So would you be able to tell the viewers how you guys have managed to do that from a tech standpoint?
Yeah. So look, in any environment, like let's say lending, you forget what you are doing. You
Hmm.
forget what your partner is doing. You
Hmm.
actually go back to the grassroots and say, what are all the parameters that are possible?
Mhm.
Right. Now, every partner that you integrate with may have a different parameter. Simple
Correct.
example, somebody will say yes, no, somebody will say 1-0.
Correct.
Right. Somebody may not even be able to give you a state ID, but they can only give you a state name.
Hmm.
Right. So what you do is you make your list of superset of all your parameters that you need. You make a superset of all parameters that may be coming in.
Hmm.
The beauty lies in making the mapper in between.
Hmm.
So no matter what the API from the partner is, no matter what the response is, you're always able to say this. So let me give an example of, or let me take a simple example. State, let's say,
Hmm.
state ID is an ID or is it a text? You just flag it in the backend and do a mapper between the incoming in between the partner API and your API, right? And I think that mapper is the fun part, because if everything can be done in the mapper, and we always, every time we do an integration, three things break, but the good part is three break instead of 97 breaking. So every time
Sure.
we do a new relationship, we always have to customize the code. But if we had 100 units of work in the first integration, it's probably 50 in the second and probably less than 10 in the third. And as
Okay.
long as that story is going, you know that when the next partner comes, how many things can change now, right?
Sure.
So I think that's what happens. But again, everybody has different protocols when it comes to, especially security, because in a financial industry, security is very key. So
Hmm.
some have API, some prefer a tunnel integration, some prefer codes to be put into their systems. So you have to
Hmm.
actually build a incredibly flexible system if you want to, proceed at pace.
Absolutely. Absolutely. I understand what you're saying. So if I were to ask you this, so you guys deal with a lot of retailers. I believe the number touches a little above 7 lakh retailers. That's what Progcap focuses on. So if, from one being regulated as FinTech, as a domain, as a regulated industry, second, you're dealing with retailers. These are more not structured, distributed heavily across India. So how do you see, from a business angle, would you be able to say that has PropCap, made this simpler for them while they want to raise their working capital? And how has that happened? Because just now you said that you're dealing with multiple lending partners, which means that there's going to be a bouquet of documents that one asks for to lend, right? Which
Yeah.
becomes the first problem, isn't it, for a
Oh,
retailer?
absolutely, absolutely. So again, that is where the rule engine comes in.
Mm.
Um the customer, if you were to go to PropCap customers, if you went to 10 customers and asked them who the lending partner is, I'm pretty sure 9 wouldn't know.
Okay.
So while our partners are completely regulatory compliant, while we are regulatory compliant, and while the
Mhm.
interpretation of regulations is different, and remember, regulations is one thing, underwriting algorithms is another thing, because ultimate underwriting algorithms are obviously the logic, just to dumb it down a little, is the logics on which the lenders approve or reject a customer case. That obviously varies from bank to bank. So what we actually do is we broadly have an understanding of how their algorithms work. All of those algorithms are there in our systems. So when a customer comes in, we
Mhm.
know which is the right lending partner for this customer. We know what the lending partner needs for this type of customer. So this varies a lot. It varies by geography, it varies by size of business, it varies by how much loan that the person wants. So if you want a large loan, obviously the documentation requirements may be different
Mhm.
from a small loan. Now, the whole beauty of the system is that it is a no-brainer system, right? You
Mhm.
just need to keep doing what is on your screen. So if you are asking for a higher limit, the documentation requirement will change in the front end automatically, right?
Got
So
it.
there is no sales guy telling you, hey, I need this. You just look at the screen, you keep doing what is on the screen.
Mm.
And in our backend, we know that we have about a 99.8% success rate. So if there's a rejection, we reject at our end. Once we approve a customer, very rarely, like we have one event a month or two events a month where we have approved, but the lender has rejected because all of their algorithms are there in our system. So again, it comes down to building that rule engine, building that algorithm. The customer is far away from the regulatory environment and the lending partnerships. The customer is a Progcap customer saying, this is what I need. And we honor that. So in that sense, for customer, it's not complicated. It's not a marketplace. It's not like you would search for something, get 5 options. So I did that in Policy Bazaar as an example.
Right.
Policy Bazaar customer used their intelligence. That was the value that Policy Bazaar brought, which is essentially that you have your requirements, you have a bunch of options, you decide which option to go with. Here it's different. Here it is a seamless process. The terms are standard. For Progcap, it doesn't matter who's your lending partner. As far as your relationship with Progcap is concerned, you can go to any lending partner, the terms are the same. And we ensure we do the job of mapping the gap between various lenders and ensuring that you have a seamless experience. So in that sense, the customer does not understand the complexity at the back end. And I guess that's the value we bring. To answer your former part, I would say that, look, the world's changed a lot. I mean, I've been in a regulated environment, different industries though, but I've been in a regulated environment for at least about 9-10 years now. Regulations and regulators have changed a lot. They've become a lot more proactive. Their logics are, I mean, obviously sometimes there is abrupt changes, but their logics are almost all sound, and they're really sharp, smart people. So luckily the regulatory disturbances are more operational in nature and not often strategic in nature. And many of them are born out of something that's gone wrong rather than just a knee-jerk reaction like a retrospective tax, as is so commonly used as an example. So I think the regulators have become smarter, faster, more responsive. You can actually reach out to the regulator and you actually get a response. All of that has really helped stabilize. And on the other hand, what's helped stabilize is everybody's gotten digital. Like no retailer does not have there'll be like 2% retailers, 5% retailers who do not have any digital mediums. Like most of them do use a UPI to get payments from customers, right? Most of them are comfortable with net banking. So still to date, there will be a 10-20% people who prefer offline payment modes, and that is more because their accountants prefer that.
Right.
Not so much that they are not digitally aware. But all of these factors have obviously helped us, stabilize our product much faster. It isn't as big a problem as it was, let's say, when I was doing sales. When I was doing sales, there was no way you knew what was happening until the Sethji opened his ledger book and showed you, this is my material. Today, that doesn't happen. Today, you have everything there. Now, the definition of digital could be subjective. It could just be a local computer instead of being on the cloud. Accessing that data may be easy or difficult, but it's there. It's there. You're no longer sitting with the retailers and saying, look, how much stock do you have? And the retailer says, sends some guy to the warehouse and says, yeah, tu count karke aaja, which was how it used to be when I used to do sales, right?
Right.
Yeah, or they would take me. I've actually been in those experiences where I said, how much stock do you have? And the guy would actually take me to the warehouse, sir, aap khud dekh lo. Right. So those days are behind us. And I think that really passed, because one of the things that has really evolved this lending industry and why you see this space hotting up is we moved from a highly collateral based environment. Like 10 years back, every loan was a collateral based loan almost. Now you move to a very data oriented, analytics oriented, algorithm oriented lending, which is based on the quality of the customer rather than quality of the collateral. And that changes the game because it is easier. You don't have to survey a person's car, house, jewelry to give him a loan. So the process is faster, it is more transparent, and hence you see the space hotting up.
Great. So you kind of preempted two of my questions. The first question that I had for you is, listening to whatever you're saying, you kept saying that, it's gotten faster, it's gotten quicker. So how much has this timeline reduced by? What has Progcap done to reduce this time? Sorry, I'm just going to,
Sure.
bring up the second question. Spoke about, data, and data is always spoken as the oil right now, right? So in terms of data, you seem to have a lot of data, and I'm sure you guys must be using this data wisely to see what else are you going to be doing with this amount of info. So I would also want you to help us understand both of this from a timeline perspective, from a data perspective. If you can help us from a technology standpoint, that would be super helpful.
That's an awesome question. So I'll do the timeline one first. That's an easy one to answer. Typically, if any retailer went to a traditional bank,
Mhm.
I would think that the loan approval process for their first loan would be anywhere between 5 to 14 days.
Wow.
Right. That's how that process works, because it is a document collection. Most of it is offline. Then you submit it in the branch office. It goes to the head office. There are some clarifications
Mhm.
which are not part of the journey, and then there'll be some validations and all of that. So anywhere between 5 to 14 days is what it takes. In Progcap, if you get started at now, which is something like, I don't know what the time is, it's probably 6. At 6:30, you could have a lending line opened, because all of it is digital. All the algorithms are already in place. If
Are you
you
saying 30 minutes and
30
one
minutes.
gets a working capital?
Yeah. And 30 minutes, of those 30 minutes, 25 minutes are you just finding your document on your computer and uploading it.
Oh,
Uh,
wow.
because that's how the journey works. You just come to the journey, it asks you for let's say a PAN card.
Mm.
You accidentally upload a driving license instead of a PAN card, you'll get an error right there.
Mm.
It won't go to the head office and somebody will not look at it and say, "Arey yaar, yeah, driving license kahan se aa gaya? Mujhe to
PAN
identity
card
proof
चाहिए
mein
था.
PAN card chahiye tha," right? If you're uploading a bank statement, that bank statement is analyzed real time, right? So what happens is, and a lot of and I'll segue into the data question because it just flows seamlessly. Because by the time the retailer comes in, we already have a lot of details about that retailer. So
Mhm.
almost every journey of ours is a pre-approved journey. And the way that works is, we first go to the distributor, we log into their ERP, we connect to the ERP, we get in the history of the retailer, we approve the retailer, and then we trigger a communication with the retailer saying, look, why don't you come on board? This is great for you.
Mhm.
So in some sense, in many senses, in fact, it is an absolutely pre-approved loan.
Okay.
You just do the
Pre-
journey as
Got it.
long as no new information comes in. So there are certain new informations that come in later, like the formal CIBIL pull will only happen with user consent, right? So as long as
Mhm.
the CIBIL score is okay, as long as you provided all the documents, you get a lending line in 30 minutes,
Wow.
as quick as 30 minutes.
And this
And
is for what, size of loan? Because 30 minutes is like sounding music to my ears. So is there like
yeah,
a,
the loan in our industry varies. We have a lending line because we do invoice-based financing. The line could vary from anywhere between 5 lakhs to a few crores.
oh,
Uh,
wow,
we have
interesting.
cases which are dozens of crores as well, but mostly it is between 5-6 lakhs to 1 or 2 crores.
Interesting. Yes, please. You are going to seamlessly flow into the data question. I'm
Yes.
sorry.
And I was just going to say that all of this, the speed is because all the activities of underwriting, deciding whether customer is worth it or not has already happened before this. That, by the way, is also automated. So what happens is, we log into the ERPs of our distributors who know the sales of the retailer. These are the guys, the distributors are actually the ones who are recommending that, look, I want to extend a credit facility to my retailer so that I get the money quickly and the retailer is able to buy stock uh, even when they don't have the working capital flow. So all of that data is available. The history of the retailer, how much he buys, how much outstanding do they have, how frequently they pay. All of that is already crunched. Each retailer is given a score. Based on the score, we approach the retailers. So pretty much all the basics has been done. Now the only basics of almost all underwriting has been done. Now what is left is the KYC, documentation, and a final check of third parties like a CIBIL score, as an example, which just happens all seamlessly, all online. There are a bunch of these fantastic partners we have who provide some of these APIs. Some of them we build ourselves, which do, let's say, things like PAN card authentication, GST and data to ensure that we're
Sure.
getting there. And at the end of the day, now the contract is also all digital. So what happens at the end of the day is that after you do this journey, you just get a link saying do your Aadhaar validation, and the contract is signed and you're ready to go.
Awesome. Awesome. So, Ashish, do you see, I'm not talking about going into blockchain versus favoring the loan, but do you see blockchain being used for the KYC purpose? Do you see that Progcap could build it sometime in the future because you seem to have all the data, you seem to have all the channels? Do you see that happening for the company as a tech
For
leader?
now, no. For now, no. I think we're sticking more to traditional rule engines
Okay.
and machine learning algorithms to figure out. And machine learning algorithms also are more on the analysis side, saying how do we want to change our underwriting logic. So we have, as a simple example, let's say we've said a CIBIL score of 650 in Delhi is good enough. Now, after seeing our customer behavior, we may actually say that, look, customers in Delhi are doing very well. You can actually go below 650 or go above 650 in some cases. So we use traditional algorithms and rule engines, which we define very well. We use a lot of ML to identify what are the things we need to tweak in that. Right now, we're not getting into blockchain or have any path to blockchain right now, to be honest. I think blockchain is a very, very ecosystem play. We're not in this alone. So, and we are with our partners, and really it makes no sense to have one section in blockchain and everything else on traditional systems.
Sure.
We see the value. We don't see the quantum gain due to the effort there.
Understood. Understood. So if I were to also ask you in terms of, how do you see that this is going to help a lot of people in the future? You mentioned 30 minutes. I'm stuck on that for some reason. Yeah, because I think it's a milestone by itself. So congratulations to you and your team for making this happen. So do you see a lot of value that will get created, let's say in the next 12 to 18 months? I'm sure you're more what is happening from the regulatory bodies and we would as outside of the system. So what do you think is going to change from a fintech domain standpoint, tech standpoint? Do you see this further going down from 30 minutes? Do you see that data would be put into a very different use? If you can throw some light around that, it'll be helpful.
No, absolutely. I think the demands will keep going more. The automation will keep going higher. So I've been doing this even in my previous avatar, but we used to do document checks manually 5 years ago, 6 years ago, as soon as 5, 6 years ago. Now we don't do it manually.
Correct.
What that's helping do is it's helping do two things, two or three things rather. One, it's bringing the cost down. It's all automated. Human capital is not required. It's all software driven. So it brings the cost down. And remember, lending is a thin margin business. So costs are we are very, very sensitive to costs.
Sure.
If you're going to make profit, you actually need to be very conscious. So it brings the costs down. It brings the customer satisfaction, TATs, everything down. What it also does is that it allows you to focus. You're not focusing on, hey, how many people took a holiday today? What has happened because, some lines are down or something is happening. You actually have a fairly well-run machinery, which leaves your mind with, and especially mine, as a person responsible for coming up with this product innovations, to actually focus on the future. And therefore, I do feel that as the ecosystem kicks in more and more, like as more and more documentations are automated. So today, for example, almost everybody has PAN, Aadhaar automation, but something like a bank account is still a gray area, right? So now account aggregator is coming in, which makes bank account statements absolutely seamless. And I know there are a bunch of startups doing account statements. It's still not a seamless process. Account aggregator data is humongously structured.
Sure.
So now the one process, which was bank statement analysis, in another 12, 18 months should be a no-brainer, right? So stuff like that. So if you look at every leg of the journey, there are only 8, 10 legs. We're probably 5, 6 into automation and 2, 3 into manual. I think over the next 18 months, even those will go away. And which I think should be fantastic. Our customer experiences personally, and this is more I'm talking about Progcap and not about the ecosystem, is that our customer experience will tend to get more and more easy, which means that a retailer would be able to come in and say that, look, I just want to do this journey, much like you open a Zerodha account as an example. And not really need a sales guy to be sitting there and guiding him, which happens quite often. Right. So I think, and we're already seeing signs of that with the latest releases that we've made over the last couple of quarters.
Sure.
Customers are hungry. Customers learn when they really want to learn. And, we used to keep having these arguments 5, 6 years back, how much will a retailer learn and all.
Uh-huh.
I mean,
It's
grandparents have learned WhatsApp better than us when they needed to speak to their grandkids, right? So I think the words become need-based if your communication is clear. It's also very interesting because we're in a very interesting market. We aren't in a planned lending market. Like let me give you an example. When you take a term loan,
Hmm.
which is for those term insurance rather. When
Right.
you take a term insurance, what you typically do is that you have a plan,
Hmm.
right? You've reached a particular age, you want to secure
Yeah.
your future, so you plan it out, and therefore whether it takes 30 days or 45 days, it doesn't really make a difference. In retail, what happens is there's seasonality.
Correct.
Now, suddenly Diwali comes in, suddenly December comes in when a lot of new mobile models get launched. Suddenly March comes in, which has taxation implications. You see these spiral spikes happening, right?
Correct.
Now, during that spike, you do not have the luxury of saying that, hey, I'll start my process on Monday. I will get a loan by next Monday. You don't have those 7 days, right? You have a
Yep.
problem
Yep.
today. Diwali is 3 days away. You need that stock now, right? Which is why I feel this whole process that I talked about, 30 minutes or whatever, is very, very valid. And I think the market starts to realize the value of that. As you realize the value of that, the brand starts to build, uh, which is how this story goes. So I think this will keep getting better and better. I think the regulatory environment will keep getting finer and finer. Digital lending is still a relatively new concept.
Sure.
Lending service providers that we are is a fairly new concept. So I think the regulators will keep a check and see what's going wrong, where they want to make changes, where they want to relax. Remember, I know regulations keep getting talked of in a negative sense. We've seen enough and more examples where the regulators have come back and saying, why aren't you using it? And they've actually relaxed regulations to make a particular thing happen. Co-lending is an example.
Hmm.
In co-lending, and I don't want to get into very, very lending specific details here, but in co-lending, they had a policy. The regulators had a framework, which was the 2018 circular. Then the regulators went back and saying, why aren't you doing co-lending? And the lenders say that, look, this is too complicated. And then,
Right.
then the 21 circular came, which was a lot simpler. So I think the regulators are also going towards more and more towards, using and doing the right usage. Everybody understands many of these industries are thin margin industries. So as the regulator helps bring costs down, it is only going to be more beneficial for the customer. And I mean, if you look at it from a mathematical perspective, you put money in a savings account or a fixed deposit, you get anywhere between 3 to 7%. You want to take a personal loan, you get it at anywhere between 14 to 25%, right? What is that arbitrage between 3 to 7 and 14 to 25? It's a 12-13% arbitrage. Most
Sure.
of the arbitrage is because there's a massive cost associated with running the operations of a financial company. And as this automation comes in, as these rules come in, as things become faster, cheaper, quicker, as more and more customers adopt, so you get the benefit of scale, uh, the chances of turning profitability and good profitability is still very high.
Sure. Ashish, I'm just going to bring us back to the tech part of it. So, in terms of Progcap, if people had to come and join you, it sounded very interesting on what you guys have built so far. Sounds interesting that there are 3 more things that will get automated. But what can a technologist look forward to if they had to come and work with you?
Yeah, so I think it's both in terms of technology and in terms of culture. The good part is Python. The Progcap is a relatively new company. We're about 4.5 years old. So most of our tech stack is very, very modern, right?
Mhm.
So thankfully, and that was in fact, I've only joined here a year ago, and that was one of my criteria for selecting a company, saying, look, I want to be on a modern tech stack, and it's fantastic. I mean, yesterday night I was myself doing some coding on Postgres, which is the database we use, and I suddenly realized Postgres uses regex, which I never knew. So I was going to write a code, bring it to Python, write all of that, and suddenly I realized Postgres actually has regex, which I had personally never used. My team had, but I hadn't. And suddenly, what what I had planned to do in 2 hours was done in 2 minutes. So I think one of the big things to look forward to in Progcap is it's a very horizontal kind of an organization. So what happens is when you come in, you're not a silo. There is nobody in my company that's more than 2 degrees of reporting away from me. So at maximum, people have a manager who reports to me. It's that flat, right? So the advantage you get because of that is, one is access, you get good training, mentorship. Second is you learn across the board. So you won't be in one silo, like you won't be one person who's working on CRM and only know what customer complaints are. You will actually, the way even the CRM, I'll give an example of what's fun for the tech guys here. The CRM is deeply integrated with our lending management and lending origination systems, the LOS and the LMS as it's called in lending. And when a CRM guy needs to do something, they don't make a request to anybody. They do a change in the CRM itself that reflects in LOS, LMS. So it's a deeply integrated system, right?
Yeah.
The front end, the applications are all latest stack. We use Flutter, which the tech guys will be well aware of. Our code base is Python, Postgres. We use a little bit of DynamoDB wherever required. But the beauty, and I think you'll find organizations, especially the young organization, use a lot of this tech stacks. Everything is on the cloud. That's a no-brainer. So I think it's fairly modern. So it is technology that hopefully people will look at and see will be the backbone of a lot of tech over the next 10, 15 years. So in that sense, it's not a legacy system, which a lot of FinTech financial companies are. The other part is, like I said, you're not a siloed person. You will have experience of everything from what's the customer experiencing to how a loan works, to how an approval works, to how the customer queries and complaints come in. And that gives you a very, very good 360-degree perspective. So that is the second part that I find very exciting. The third part I find very exciting is that we actually work on a very output-based mechanism. So more reviews are, how much has the NPS changed this month? Then from how many projects did you take live? And I think that's a massive learning curve and a massive learning opportunity for developers, because very often when I interview, people sporadically start talking about timelines. Even though I'm not asking them anything, a lot of my people I interview just start talking about timelines. Like, look, I've done this fast, and I've done this fast, and I've done this fast. And when I ask them, look, you did it fast, great, that is very encouraging. But how did it change the company? And typically, very few people are able to answer that question. And that's not how you want to be. I mean, in anything you do, you'd rather do one thing and change the company by 10% than do 100 things and change the company not even by 1%, right? That's the kind of environment Progcap is, which becomes a great, I think, learning curve to even how, business and logics and decisions work.
Awesome. So are you looking at hiring people, Ashish, in Gurgaon? And
We are a well-set team. So we're not in a hiring spree. We have now reserved our hiring to incoming requests, such that we know people are excited about the domain. And, when you get an excited, talented person, then you always find out a way to, you never let go of good talent. So you know how it is. So when you find a incoming request, to give you a perspective, I think except for 2, all our hiring this year was through referrals.
Oh, interesting. Very nice.
Just two through the HR channels, everything else through referrals. So that's how we are keeping it. So I welcome anybody who's excited about this journey to reach out.
Yeah, we're going to leave your social handles. That's why I was asking you that.
Oh yeah, perfect. Please do that. And yeah, I think it's an exciting journey, and it's a very exciting learning place where you get a say, where you genuinely get a say. And I mean everybody is 2 degrees away, so you actually are able to express yourself, learn, make your mistakes, and then learn, do well and learn whichever way you learn. But I think it's a nice tight organization.
Awesome. Thank you so much, Ashish. It has been wonderful chatting with you. I really enjoyed the energy that you filled in the room. I'm sure most audiences who've been listening will want to work with you, and I encourage them to send you requests on your social handle and get in touch with you. Thank you
so much, Roopa. Been a pleasure being here.
Thank you so much.
Uh,